Good morning. It's April the 5th, 2018. Time to kick off another day of trading, and tomorrow brings the unemployment numbers, and I think the market's probably going to play for a number higher than 195,000 based on the ADP numbers. While they don't necessarily move in the same direction, quite often they do. You can't count on it, but most of the time it will come out that way. That typically leads to pause days. We'll start with our disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, the context of today's market is the news. Outside of China, equities around the world are much higher. They followed the U.S. lead. The U.S. markets, equity markets and treasury markets, bond markets are the dog. The rest of the world is the tail, and they usually follow what we do. China's markets were lower. There was a holiday in China, so they didn't get to play. Today's news domestically is limited. The news out of Europe, their economic numbers out of the EU show softening. We're seeing it in retail sales. We're seeing it in industrial production. Haven't seen it in employment very much just of late. And Europe's inflation on an annualized basis is stuck below 1.5%, and they'd like to have it at 2%. Why do all governments want inflation at 2% per year? Because it cuts their debt in half every 50 years. And that's why it's done. Today's news just really isn't there. We have international trade minus 56.7. Jobless claims at 230, probably comes in lower than that. Net gas minus 29 BCF. The focus for treasuries and gold will be the direction of the ES. Okay, now, cold hard reality. We talked about this a little bit yesterday. We have a 20T economy. 50 billion in tariffs is 1/400th. China's, I'm guessing it's at 11 trillion. It's 1/200th. And remember, these are proposals. They're negotiating tools. So most of the commentary yesterday centered on the economic impact of tariffs. Not good for long-term trade, not good for as fast a growth as possible generated by trade, and that's where a lot of growth does come from. But in the overall scheme of things, not that big a deal. And the fact that these are negotiating proposals and they will be changed or can be changed before they hit. And if they do hit, that's the impact. So not a lot going on right there. I'm guessing we have a trading range today and treasuries with a downward bias. So 20 to 24, sell 1. 27.31, sell 2. On the buy side, 13 to 17. I think we can go a little bit lower. Buy 1. 5 to 9, buy 2. Market's focus will be the direction of the Emini. In my not so humble opinion. Egos are a dangerous thing, right? Especially when it comes to trading. I hate to tell you this, but if you're going to be successful as a trader, you are going to be wrong, at least every now and then. And because you're not infallible and you can be wrong, you have to manage the risk. Your bottom line is not determined by your percentage of winners by your average winning trade, anything like that. The bottom line comes from the magnitude, or is determined by the magnitude of your losses, nothing else. And you can't get around that, so you have to. And the other thing is, it takes you a month to generate what you think is a fair return for trading futures, and you can lose that in a day or two. You lose it a hell of a lot faster than you make it, so you have to be careful. You have to be very cognizant of the risk. 12 to 16, number 1 on the bond. 19 to 23, sell 1. 27.31, sell 2. And support the buck to 4, number 1. 25.29, buy 1. 17.21, buy 2. If you notice the trading that we're doing in the room, we're very, very defensive. We leave a hell of a lot of money on the table. We always have our stops out there. And the best trades in the world are those that just bang, right? I mean, you're just immediately locked out of your position and you don't have any chance to expend emotional capital wondering about whether you should be in or be out. And as you do this over time, you get to the point where your wins and losses, the emotions associated with each are dampened down, and you really get to that mindset of next trade, which is where you have to take yourself. And again, it took me light years to appreciate what a trader said, and I believe it was in Market Wizards number 1. And he said all trading was learning how to take small losses. And of course, when you first get started in this game, you don't really believe that. You think it's a methodology. No, you don't even think that. You think it's a system. You can buy a system or a technical study that's going to make you money. Okay, you can see we've got resistance right here at 35. So 34, 36, sell 1 on gold. 38.40, sell 2. On the buy side, 28 to 30, buy 1. 24.26, buy 2. Now, nobody likes to be wrong. Everybody wants to be right, and you don't take a trade without thinking you're right. And what I'm telling you is that you should try to get the mindset, well, that looks like a reasonable trade to me. I'm going to give it a shot and see what happens, as opposed to, by God, the market's going down, it's going up, and I'm going to get in and I'm going to ride it. Like, you just have to work on what you can do as a trader, make your business plan repeatedly, and try to get rid of as much as the other stuff as you can. And that's the way you stay out of trouble. Now, another aspect about this is, what is the purpose or role or function of losses? Necessity is the mother of invention. Your losses are what force you to change your behavior and modify your approach to trading. And they're actually a good thing when appreciated and seen in that light. Otherwise, you won't view them as such. Okay, tomorrow's non-farm payroll number tends to freeze the euro. We're a little bit lower. I think the market is headed lower. You can see that right here. You can see the fact that we're dealing with a great big B that is notching lower. You can also see that we've got a very, very square distribution right here. So best buying's down here is going to be in the 122 area. Best selling is going to be in the 125 area. So right here we are at 23.25, so 40 to 50, sell 1. We'll play for a trading range. 65.75, sell 2. On the buy side, the buck to 10, buy 1, and 22.75, buy 2. Trading is very easy to talk about. It's very easy to explain how you can make money doing it. It's very, very difficult to do. It requires more personal growth to become successful at this than you're aware of right now. And you will solve all your little foibles, or almost all of them, before you emerge as a trader. It just takes time. I used to joke about a wife beater who promised to quit beating his wife and became a successful trader. And we all have little behaviors. That would be an extreme example of something we wish to drop from our personality or our behaviors. But you got to get rid of those before you can become a trader. And that's what makes trading very difficult. Okay, will 63 hold? We're pointed down right now, so let's play for stops below 63. So we'll put 62.74 by 1. And then 62 1/4, 62.50 by 2. See the break right up here is at 50. So we'll make 40 to 75, sell 1, try to come in under 50. And then 64 1/4, sell 2. Crude, great big B, more supply than demand. Everybody's counting on worldwide economic growth to pick up the slack. We can see the numbers coming out of the EU. Our economic numbers are softening. So the EU and the rest of the world are counting on China's growth, the US's growth to buoy or float the world's economy, especially in Europe. Europe hasn't figured out that it's all the rules and regulations and taxes that make growth so hard to get in the EU. Last but not least, the E-mini. Okay, the E-mini, every stock market around the globe outside of China is much higher today than yesterday. The U.S. equity markets are the engine that drive the world's equity markets. We lead. If a turn's going to happen, it happens in London. And we had a very, very strong short covering rally yesterday. Now, again, 1/400th of our economy, probably 1/200th or less of the Chinese economy, and these are proposals. And Larry Kudlow came out and said, hey folks, these are proposals, they have not been instituted yet, and I don't think that is as bad, or it will be as bad as the headlines implies it'll be, and the market rallied. Okay, the economic conditions in the United States, if you look at it from a manufacturing and employment, is strong, and it's maintaining that. So the economic conditions are good. The corporate tax rate cuts will guarantee a great year, earnings per share, etc., for corporations, unless we have a catastrophic piece of news. It'll probably take us into 2019 also. So the economy's pretty good, and so the fears of the trade war are legitimate, but the reality of a trade war and its impact on the economy, if as stated right now, isn't going to be that much, and the market's reacted. So what do we have? We have a 2600 minus and a 2800 plus market right now. We're in a trading range, and we're consolidating that move that began the day after Trump was elected. So right now, 64, 69, sell 1, 74, 79, sell 2. On the buy side, 50, 55 is where support is right now, so we'll make it 51, 56. That's fairly aggressive, but I think the first time down there it'll hold. You can see that in this Y and W period low right there. And then we'll make 41, 46 by 2. Looking for a trading range today. And the sell against 75 is the probably the best short you can see, and probably buying against 50 is pretty good long to get started. Just big picture stuff. Okay, it's going to take a bit to get everything up and done. Out. I'm going to get busy on that. I'll be back with you as soon as possible.